everybody, it's Kat Williams here with eXp Realty. Today I'm going to be giving you an answer to a question or two about mortgage industry and what everything means. And I am here today with Brandy Nelms of Caliber Home Loans in Olympia. Good morning, Brandy.
Hi.
Hi. So I'm going to ask you a couple questions today about different types of loans, what my clients need to bring to you so that you can get them pre-approved. So we'll start with a question.
Sure.
All right. Can you explain to my clients what an FHA loan is? A lot of people think that they're only qualified for it if they're a first-time home buyer.
Yes, FHA loans are a government-backed loan, and initially they were always sought after by first-time home buyers because of the low down payment of 3.5%. However, now there are several conventional loans that also allow 3% down payments. So some of the reasons that somebody would utilize an FHA loan over a conventional loan is if they have lower credit scores or credit blips like a bankruptcy or a foreclosure. FHA allows for shorter periods of time to lapse from those events before they'll actually lend on a mortgage.
So now that you've explained what an FHA loan is, what are the specific requirements for an FHA loan?
Typical requirements are 3.5% down for down payment. They also need to have a minimum credit score of 580. There are some borrowers that if you don't have any credit history at all and no credit score, we can do alternative credit and also utilize the FHA program. Debt to income ratio generally needs to be around 45%. Sometimes we can go higher depending on credit and assets. And FHA does allow for gift funds if you don't have your own funds for the down payment, but it has to come from a family member.
Tell me what gift funds are all about, how they can work when you're getting a loan.
Gift funds are when you can receive money from relatives for your down payment or closing costs, basically any contribution to your loan. They do have to be from a family member, and if you're utilizing FHA, they have slightly different requirements than a conventional gift. So for FHA, we do have to have a 30-day bank printout of the donor's account, along with proof of the funds coming out of their account and going into yours. If you're using conventional financing, conventional would only require a copy of the cashier's check or proof of the funds leaving the donor's account and going directly to yours. We do not need the 30-day bank printout for conventional.
And they have to sign an affidavit or declaration that says that it was a gift, right?
Yes, in both scenarios, there's a very specific gift letter that the lender would give you for the donor and the recipient to fill out.
And what does that say basically?
Basically just says that they are gifting you the funds and that it's not a loan and you're not having to pay the funds back.
So how is a borrower's interest rate determined for their loan?
So interest rates are different for every loan type and every scenario. Basically, there's a prime rate, which is the base rate that if you have excellent credit, a perfect transaction, then you start at the prime rate. For every scenario, there are different things that factor into it. So it can be your credit score, the amount of your down payment, the loan program that you're utilizing, the transaction type, so purchase or a cash out refi would have different rates. So basically every day the lenders get their base rate sheets, and then you've got these add-ons or sometimes improvements depending on what category it is that they're adding into that determines your final interest rate.
What documents do you require from a borrower before you can actually get them fully approved through underwriting?
So typically a lender is going to look at the last 2 years history, and that includes your housing history, your employment history, and income history. And so one of the things that we will pull is a credit report and go over those with you. As far as income, we typically require 30 days of pay stubs and the last 2 years W-2s. If you're self-employed, then we could also require the last 2 years tax returns. That includes your business and personal. As far as assets go, we could require anywhere from 1 to 2 months of bank statements and other assets. And then of course we need to know where the money for the down payment's coming from.
And next week we will be back to talk about other types of loans that are available. Everybody take care and have a blessed week.